and go.
Good morning, everybody. My name is Mark Granville. I'm the Head of Education at the International Capital Market Association, which is an association based in Zurich, Switzerland. We are very, very pleased to welcome you here today to attend this webinar, the topic of which is the impact of sustainable bonds and Sukuk in the Saudi market. The webinar is jointly hosted by the Financial Academy and the International Capital Market Association, or ICMA. The Financial Academy, to provide some context, was launched in March 2019 to provide training to develop the skills, knowledge, and expertise for financial sector professionals in the Kingdom of Saudi Arabia. The Academy supports Saudi Vision 2030 as part of the Financial Sector Development Program that supports the development and advancement of the financial sector organisations. One of the key objectives of this program is sharpening the capabilities of employees in the sector to prepare specialised and qualified professionals and advance innovations in the financial field. And we hope that this webinar will support this objective. To introduce ICMA, for over 50 years, ICMA and its members have worked together to promote the development of the international capital and securities markets, pioneering the rules, principles, and recommendations which have laid the foundations for their successful operation. We currently have over 600 members in all segments of the international debt capital markets in 65 jurisdictions globally, and among our members are public and private sector issuers, banks and securities dealers, asset and fund managers, insurance companies, law firms, capital market infrastructure providers, and central banks. ICMA serves as the secretariat to the Green Bond Principles, the Social Bond Principles, the Sustainability Bond Guidelines, and the Sustainability Linked Bond Principles, to which 98% of the world's sustainable bonds were aligned in 2021. The principles are backed by a global market initiative which brings together all market participants and stakeholders from private and official sectors. I would like to also remind you that there will be a QR survey or QR code at the end of the survey for any feedback that you may have. So, without further ado, I would like to introduce you to the participants or the speakers for this webinar. First, Ms. Simone Utermark, who is a Director for Sustainable Finance at ICMA. Simone is based in London. We have Mr. Rico Zhang, who is a Senior Director at ICMA in Hong Kong. And finally, we have a special guest, Mr. Hatem El-Zamati, who is the Executive Vice President and the Head of EMTN at the Saudi National Bank. So first, we're going to have Simone do a small presentation for you to introduce some of the standards, principles, and sustainable finance instruments, followed by a panel discussion with Simone, Rico, and Hatem discussing the main challenges to adopting and implementing ESG standards and guidelines in Saudi and recommendations on how we can accelerate that process. We will finish up with a Q&A, and we'll look to close at around midday Saudi time. I would remind you that if you have any questions whatsoever, please enter them in the chat function, which I'll monitor, and I can post them to the speakers. And obviously, there will be time at the end for Q&A. So, without further ado, I would like to introduce Simone. Welcome, Simone, to start the presentation.
Thank you, Mark. I hope everyone can hear me and see me well. Is that okay? So as Mark said, I'm just going to go through a couple of slides, and that's going to be a bit of a whirlwind tour in 15 minutes. But if you're interested in learning more about the principles and the related market, we also have courses on our website, self-study and live courses as well. So without further ado, let me go through the presentation. I thought I'll start with a market overview. First of all, the global market, and as you can see, we're looking here at stacked bar charts of green and social bonds, sustainability bonds. Sustainability means it's for a mix of green and social projects, and SLBs, which stands for sustainability linked bonds, where the first three are so-called use of proceeds bonds, i.e. they are financing certain projects. SLBs are so-called general purpose bonds, so the focus is not so much on what is being financed, but rather the strategy of the issuer. But we'll look at that in a little bit more detail. So as you can see, the market has grown over the years. The Secretariat came to ICMA in 2014, and it's a market that has seen initially a lot of growth in the green space. Then gradually there was a lot in social as well, especially during the COVID period. So when the pandemic was at its highest, 2020, 2021. And the new instrument SLBs is actually, interestingly, the one that is growing the fastest. This is an overview for the MENA region. As you can see, there's no red in the picture, so we haven't seen any social bonds being issued in MENA yet, maybe. But we have some sustainability bonds, and as I just said, sustainability is a mix of green and social, so you will have some social projects being financed through the sustainability bonds as well. And this is a breakdown by volume of issuer type. So as you can see, the majority of the bonds have been issued by financial institutions, followed by corporates, and then governments. I should also say that a majority of the bonds in the region are Sukuk. So you can actually have a green Sukuk, for example, or a sustainability Sukuk. So it can all be issued in that type of format as well. This is an overview on the development of the principles. The first green bond actually has been issued in 2007, and that was by the EIB, the European Investment Bank, and then a year later, the World Bank followed. And so this happened before we actually had principles in the market, and then market participants came together in 2014 to create and then launch the green bond principles. And as I said, that was also the year when the Secretariat was then assigned to ICMA. The successful launch of the GBP, as we call them, was followed by the SBP, which are the social bond principles, and also the SBGs, the Sustainability Bond Guidelines, because that brings together both green and social principles. And then in 2020, we have seen the Sustainability Linked Bond Principles, as I said, and you can see that on the slide for general purpose bonds. And we've also published very important guidance that I would argue is most relevant for your region as well, because it's on climate transition finance. And as you know, a lot of regions or countries in the GCC will have to transition away from the oil eventually. This is an overview on what came out new this year. So we had our AGM on the 28th of June. Some new guidance, some of the guidance or principles have been updated. So everything that's highlighted in green. And you can find this overview on the ICMA website, where you can also click on the links to find hopefully what you're looking for. And as you can see, we haven't really had any new principles this year, but it's been more of a lateral expansion, if you will, because the market keeps asking for more guidance to provide more transparency and just a bit more help with certain issues and questions. The principles, I always like to say this or clarify this, because they're often called the ICMA principles. And as I said, we are managing the Secretariat or providing the Secretariat. but we are not the ones who have created the principles. It's really, they've been so successful and continue to be successful because it's an initiative by the market for the market. So we have an executive committee which consists of in equal parts, as you can see here, of investors, issuers, and underwriters. So those have to be participants that have issued a social bond or invested in a social bond or underwritten a sustainable bond. So really have knowledge in that space and can really speak from their own experience as to what needs to be created or updated. And we also have a steering committee, which again in equal parts consists of those three groups. The chair at the moment is the EBRD, European Bank for Reconstruction and Development, and the co-chairs are BlackRock and BNP Paribas. This is what Mark had already mentioned. For 2 years in a row now, we've done some analysis, and we found that last year, 98% of sustainable bonds, as we call all of them together, have been aligned to the principles. So it's really a global standard, you could say. It's a voluntary standard, but it's global. This is just briefly on how the use proceeds bonds principles are structured. So you have 4 pillars or 4 core components, as we call them. The first is the use of proceeds. So what is being financed, then recommendations on the process for project evaluation and selection, the management of the proceeds, and the reporting, which consists of allocation reporting, so where does the money go, and impact reporting, i.e. what is being achieved with the money. Then there are 2 key recommendations, one for a bond framework. This is something that's typically done anyway. Anyone who issues, let's say, a green bond or also a social bond would start with issuing a green bond framework or a social bond framework where they detail how they are aligned. And then also typically, but it's a key recommendation, you would have a so-called external review, which mostly on the framework takes the form of so-called SPO, second party opinion. So that's to say, for example, that the external review provider confirms that they think the issuer is aligned with the green bond principles, for example. This is what the eligible green projects look like. So there are 10 eligible green project categories mentioned in the GBP. So issuers wanting to issue something, they don't have to look exactly that they have any of these project categories, but it should be something that fits under those project categories. And that's just going to underline that the principles are not too prescriptive, which is also why they have been so successful. But they just give you sort of a general frame within which you can work. On the social side, we also have social project categories. And as you can see here, in 2020, we have added specific categories such as job retention themes to address the impact of the COVID crisis on employment. So that was to highlight that you can issue a social bond, for example, to raise financing for COVID-related needs. And then it's very specific on the social side, which we don't have on the green side. For social, because it's not based on science, so often a bit more difficult to define, we also have something called a target population. So if you issue a social bond, you should also define who you're going to help with the money that's being raised. This is just what the green bond principles look like at the moment. We've just gone through this. So these 2 recommendations on the bond framework and the external reviews have only been added last year, although the market has really practiced those for many years. And this year we have also added an appendix or updated the appendix for secured green bonds. So that really speaks to the fact that sustainable finance by now is really permeating all asset classes, and it's really proliferating. So we need to update our guidance accordingly. This is also supplementary guidance, and you can find everything that I show you here on the ICMA website under sustainable finance. So I've just explained to you that under reporting, we have allocation reporting, and increasingly important to investors is impact reporting. And in order to help issuers or to give them an idea as to what they could report on, we have 2 handbooks, one for social and one for green, and you can find templates in them with example indicators as to what you could report on. This is the guidance handbook on the left, keeps growing because that's really compiling all the Q&A that we are coming up with, so all the questions that we get and then the answers that the executive committee finds to those. So this is getting bigger and bigger, but very helpful. I recommend you have a look at that. And then there's also a book or handbook which shows you how you can map the eligible project categories to the Sustainable Development Goals. This is also something that especially investors like because it gives them a very quick indication as to what the bond is financing. Sustainability-linked bonds, as I said, is still a relatively new product, but nevertheless the fastest growing one. So this is this doesn't have those 4 core components. This has 5 core components, and it's working in a completely different way because, as I said, the focus is not on what is being financed, so you wouldn't have eligible project categories, but the focus is on the strategy of the issuer. So issuers would issue this to support whatever their strategy is. And interestingly, SLBs, as we call them, have really emerged as an instrument to finance the transition. So they're used by a lot of companies in so-called hard-to-abate sectors, such as oil and gas, for example. So importantly, you have to select key performance indicators, KPIs. Those, in order to become more meaningful, have to be calibrated to sustainability performance targets, SPTs. To give you an example, a KPI could be you as an issuer want to reduce your greenhouse gas emissions. And in order to make that more meaningful, you would add an SPT to say, we want to reduce this by 45% or something. And then again, to make it even more meaningful, which investors want, you would also say up to what year you would want to achieve that. Then based on that, there would be a bond characteristic. So if you, for example, don't achieve those KPIs that you're setting out to achieve, it could mean that you will have to pay a higher coupon. So that's something that would be triggered by that. There are other options, but the most popular one at the moment seems to be this coupon step up. Then very importantly, you have to report on your progress. And this also has to be verified. So whereas under the principles I talked about before, the GBP, SBP, and so on, all of this is recommended. Here it's actually mandatory because of this bond characteristic that will be triggered depending on you achieving this as an issuer or not. We continuously publish guidance, as I said, to help the market while not wanting to be too prescriptive. This is something we published this year, 300 KPIs. Again, you can use others, but this is just to give the market an idea as to what they could publish or what they could use as an indicator. And as you can see, you can actually sort by sectors and subsectors. So I recommend you have a look through this. Again, it can be found on the website. Then finally, the Climate Transition Finance Handbook. So these are not principles, but this is supplementary guidance, which you can use. And it's really there if you, for example, issue, let's say, a green bond or a sustainability-linked bond to finance the transition, then using the or making the disclosures that are recommended in the handbook, that will really add to the credibility of your strategy. So an issuer should really say, you know, what's the purpose? Why are they having this certain strategy? Then they should also say why this is materially relevant to their business model. Would they otherwise go out of business, or what would happen? Then very importantly, they should use science-based targets and pathways. So the book actually mentions a couple of initiatives we're not endorsing those, but just to give you a couple of examples, such as the Science-Based Targets Initiative, Transition Pathway Initiative, and so on. And then very importantly, for all the principles, they're really there, and also the additional guidance, like in that case, to create transparency and for issuers to be very transparent or as transparent as possible, so that investors can really understand what they're trying to do and why they need financing from them. The handbook, while being for the transition, increasingly there's also a focus on the social side of this. So a transition should really be done in a just way. You've probably heard of the term a just transition. So this is also emphasized in the handbook, that issuers should also be transparent as to what they're doing. If the transition leads to perhaps people being laid off or needing to be reskilled or something, retrained, then also mention that and talk about that. This year we have published additional registries. So I've just mentioned the Transition Pathway Initiative and Science-Based Targets Initiative. This registry gives you a lot more. It mentions a lot of initiatives, and not only that, you can also go in there and filter. So if you're an issuer, but also, for example, if you are an investor that wants to decarbonize its portfolio, then you can go in there and have a look as to what kind of initiatives could perhaps be helpful to whatever you want to do. Again, these are just some examples, but have a look at our website where you find the full registry, and you can then open that in Excel. And this is my final slide, and this is just to emphasize transition. You often hear about transition bonds and so on, and ICMA has actually so far at least refrained from creating transition bond principles, because we see transition as a theme which can be financed and actually has been financed for many years by the EBRD and the likes under the green bonds principles, and even more so under the sustainability linked bond principles. So this picture is just to emphasize that you have the principles, use proceeds, or general purpose, and then at the bottom you can see transition finance is really a theme, and the thematic guidance in form of the handbook can be used in conjunction with the principles. So you would just mention that in your framework. With that, I'll finish, and Mark, should I briefly hand back to you before we start the panel?
Thanks, Simone. Look, yeah, we can do. I think. Thank you for that. I think now we'll just go straight into the panel. So I think Simone, Hatem, Rico, this is going to be a fairly open discussion. Simone, I think you can probably start off and go from there.
Yeah, thank you, Mark. So welcome to Hatem from SNB, and also my colleague Rico, who's based in our Hong Kong office. Let me just start off by saying this year, and when I talk about this year, I don't talk about the annual or the calendar year. I'm always talking about the XCOM year, which ended in June. So we're now in the new year. So last year and continuing this year, the XCOM of the principles had a particular focus also on emerging markets. We have an advisory council as well that advises the executive committee, and there was the sole focus on emerging markets this year. So we have, specifically selected members who are either based in emerging markets or who are investing in emerging markets, or who have any knowledge on emerging markets. So this is really increasingly a big topic. And of course, you have seen in the press, unfortunately, investors seem to have withdrawn a lot of funds from emerging markets in the wake of all the crises that we're going through. But nevertheless, it remains a very important topic, and we will probably see that being reiterated and re-emphasized again at the upcoming COP27 in Egypt this year. So with a focus, or with bearing that in mind, we will focus this discussion on emerging markets. And we have, as I said, Hatem, a representative of an issuer in Saudi Arabia. And we have my colleague Rico, who's based in the Asian region and has a lot of experience in speaking to market participants in Asia, specifically China, but also the rest of Asia. Let me start with you, Hatem. Saudi National Bank has issued a sustainability bond, I think, beginning of the year. And I think it would be interesting for the audience. I've just gone through the principles. Your framework is aligned with the principles as well. If you could just tell the audience a little bit more about your experience, especially as an emerging market issuer. How did you go about that? How did you attract international investors? Just talk us a little bit through that, maybe.
Sure, of course. Thank you for that, Simone, and thank you to the NDMC and ICMA for setting this up, and everybody who's joined and shown interest. It's a good opportunity for us to be able to discuss this as industry experts, especially where it's been such a hot topic, really, and an important one on the forefront of everybody's minds. So just to start off on why SNB chose to go for a sustainable issuance, if that speaks to your question generally, Simone. Issuing a sustainable bond aligned very naturally with a lot of SNB's long-held values. So we've been participating in many investment activities which classify as eligible assets for long before sustainable bond principles were something that were on our radar. So this it made a lot of sense to us naturally that these principles aligned with our own values, and more so, or just as much so, it aligned with the national initiatives that were going on. So the broad 2030 initiatives have a lot of very positive aspects to them, which created opportunities for SNB to participate in more activities that would allow us to issue sustainably. It following or aligning our sustainable financing framework, SNB's sustainable financing framework, with the ICMA principles allowed us to formalize a lot of our existing activities, and it gave us a platform to communicate our values with the market to the extent that these values were also held by investors. And of course, it definitely contributed positively to the overall outcome of the issuance that we did earlier this year, because it's something that investors are valuing more and more. So it was a natural next step for us. It lined up with investors' requirements, and finally it created an incentive internally within the bank to take part in more activities that we know would have a positive impact on the society around us, environmentally or socially. As you mentioned, the issuance was sustainable. So there were multiple components to this, but that's I think how I would start off this discussion. But please let me know if there's something else I should go further into.
Yes. Thank you very much, Hatem, for this overview. Let me ask a bit more, or a few more specific questions. So, as we just said, and you just confirmed, what SNB issued was a sustainability bond. And I explained in my presentation before that a sustainability bond is actually a mix of green and social. Perhaps you could give us a bit more detail on what percentage is green, what is social, and why have you gone for that mix, and what kind of projects perhaps also are you financing with that bond?
Sure. So the SNB, when we published our sustainable financing framework, we already had above $5 billion of eligible assets sitting on our balance sheet. these were mostly social, and we mirrored that with the issuance. So the issuance is 10% covered by green, and the rest was covered by social, which was mostly SME loans. And this opportunity was created by a combination of the bank's strategy, its own lending initiatives that it had been doing for years that I spoke about earlier, and the national initiatives, which had also guided us in the right direction, that made this natural.
Thank you. And just as explanation for the audience, I've shown you the eligible project categories earlier. Indeed, if you have a financial institution issue a bond, and we've seen in one of the slides that I had, that's the majority in the MENA region at the moment. Banks would often issue a green bond, social bond, sustainability bond, for example, to finance a loan portfolio, as Hatem just mentioned as well, SME loans in your case mainly. And I think you told me when we talked about this before that you're currently already starting to compile data for the reports. As the audience will have seen in my presentation, the principles recommend that you do reporting as a fourth core component, and that should be allocation reporting. Where does the money go? And then ultimately something investors are actually more and more keen on to know, am I doing anything good with my money? So what's the impact achieved with what you're financing? What are you doing there, and how do you go about? Do you find it difficult gathering that data? What's your experience with that, or what are you? Any tips
Sure.
for anyone having to go through this as well, maybe?
Yeah. So on this, SNB had made a public commitment to produce its first set of reporting around the sustainability financing activities it's been taking part in a reasonably short period of time. So at some point next year, early next year, we should be producing our first set of reports. I think the allocation reporting that you mentioned was the most straightforward and easy for us to understand with a finance background, because the way we understood it is we're just offsetting eligible assets against the relevant financing activities that we've been taking part in. So it's just like a balance sheet. Sustainable or social or green liabilities generated, and then we show how they're offset against eligible assets. The impact reporting is something where we needed a bit more help, and obviously we are relying on expert guidance everywhere, to every step throughout the way, to make sure that we're doing things in the cleanest way possible and in the way that investors would expect it to be done. But the sustainability part, where we're going to need to talk, or I'm sorry, the impact aspect of the reporting, where we're going to need to be talking about the impact of the eligible assets that we're reporting on, is a bit more complicated, and that's where it goes beyond the typical format of reporting that's usually produced by banks, and that's where we've needed to rely more on expert guidance for the initial period. But I think our commitment to producing reports was something that gave investors a lot of comfort.
Indeed, it's very important to investors. Let me bring in my colleague Rico as well. Rico, we're talking about emerging markets, and I introduced you as having experience, of course, in emerging markets. But when we say emerging markets, it's one term, but it's certainly not the case that every country in an emerging market is the same, right? We have different regions, we have different countries. MENA is certainly different from Asia, from Latin America. And then even within Asia, for example, or within MENA, we have huge differences, I would argue. Should we perhaps also, in the interest of time, maybe also focus a little bit on climate finance transition, which is very important for a lot of companies, a lot of sectors in the MENA region and also in Asia. And tell us a little bit about your experience and the differences and you see, and what are companies struggling with, and so on.
Thank you, Simone. Thank you for having me, and it's a really pleasure to speak on the important sustainability agenda to Saudi Arabia participants. I think this is important to everywhere. Bear in mind the Gulf area is part of Asia as well, but indeed, like Simone said, it's a very diversified and vibrant region, and even within Asia Pacific, it's very diversified economies. You have a lot of large economies such as like China, Japan, Korea, while you have a lot of relatively small economies. You have developed countries and also a lot of emerging markets and developing countries as well. So different jurisdictions will have their different agenda, but the approach is rather consistent to just push forward this reform and to make things more sustainability into their heart. And I think the climate change is for everyone. So for pushing the agenda forward, including like a green bond, sustainability bonds, and as well as more recent products, SLB. We have seen quite diversified interest in this region. So in some certain economies, it's quite top-down, for example, like China. And basically, this is driven by the authority, and issuers start to pay a lot of attention to that and tap the market, while others are really market-driven and basically rely on underwriters and other professional bodies such as external reviewers to give more education to such issues to consider about such products. Even within Asia, for example, the green Sukuk is quite popular with those Islamic countries such as like Indonesia and Malaysia. So there's a lot of common area with the Gulf area, and I think investors and issuers, both buy side and sell side, actually are really interested to consider such products when they tap the market. In terms of the transition, this is also very important to drive the Paris Agreement just align with the targets, and also to basically drive the reform, as I said. We note that there's a slightly kind of like a division of such approach. Some will be more consistent with ICMA communities, i.e. the climate transition labeling is rather on the issue level. It's more like a thematic labeling, and such transition will label on the issues rather than products, while still, given green bond, social and sustainability bonds are all use of proceeds bonds. So to a certain extent, the market actually feel very comfortable to issue such use of proceeds bonds, and this is something they feel familiar with. So we note in the market there's certain like a transition bonds out there. So generally speaking, I think this is still encouraging to, to meet the carbon neutrality, and also basically this is a good effort for certain issues to try innovation. Having said that, we also acknowledge that this potentially will get some criticism about the greenwashing and how to make sure that such issues actually really have such commitment to the transition and to make their company more sustainable. So there's a debate, obviously, and we involved a lot with regulators and other stakeholders, and just to continue such discussion. Then I think in terms of overall the bond market, it's quite active. As you know, that in Asia, different jurisdictions put a lot of resource to develop their domestic market, including developing the right taxonomies. EU taxonomy globally, I think it's a benchmark already. So quite a few economists actually reference to the EU taxonomy. But I think jurisdictions, probably different jurisdictions will have different priorities. And I noticed they developed their domestic taxonomy, which will help not only the bond market, but overall the economics to really align with such purpose to contribute to this agenda. So I think the bond market it's really vibrant here, and I think there's a lot of potential in Asia.
Thank you, Rico. And indeed, I picked up one point that you mentioned related to the dreaded word of greenwashing. That's obviously always a fear for issuers. But as I kept saying throughout my presentation, the principles and all this guidance that we have, they really help being issuers as transparent as possible, and that helps with their credibility as well. One thing relatedly on that I would like to say, and you're probably seeing that in Asia as well, even with those new instruments like sustainability linked bonds that specifically focus on the strategy of an issuer, increasingly, and for many years now, actually, it's not a new thing, investors have focused on the issuer. So even if the bond is financing certain green projects, they will still look, does this fit the overall picture of what the issuer is doing, what they're saying, and so on. So are they really putting their money where their mouth is, or our money rather, speaking from investors' view. Hatem, let me just come back to you again. We've talked about S&B specifically, but what do you see? I've had some slides on the MENA region, which is of course very big and very diverse. What are you sort of seeing and hearing on the ground in Saudi Arabia specifically? Is there a lot of interest in this? Are there a lot of questions that people have? What can you tell us a little bit more about this market?
I think in Saudi Arabia for this market, there's a lot of opportunity. So there are a lot of eligible projects where the momentum was initially top down. So it was driven by a lot of government initiatives, and obviously the rest of the economy followed when there's such a big shift like that, and it created a lot of opportunities for various financial institutions who are taking part in these activities to generate sustainable financing. So I think it's a trend that we're going to see that will continue to grow and continue to develop in the coming period. And just to go back to your point on greenwashing or some of the more difficult questions that issuers could face, especially when they're very new in this field. I think that the main tip or the main lesson that we took away is that being very transparent with investors and being very clear about your intentions and where you are within your development in this space is very important. So we were straightforward whenever we faced difficult questions about maybe certain aspects of our sustainability strategy that they wanted to know more about, or certain ratings or whatever. We were clear that this was SNB's first, or one of its first, public steps in the direction of contributing towards sustainability in a formal way. And when I say this first step, I mean the publication of the Sustainable Financing Framework and the subsequent public issuance. So being transparent, being clear, knowing where you are in your development and the direction that you're going in, or the trajectory that you're taking, it goes a long way with investors. So you're not going to be fully developed from day one in terms of your sustainability goals or where you're taking them, but saying that clearly to investors and telling them where you eventually are heading, it pays off.
Thank you. And maybe just to finish off, because I know that's always a question, what did you see, or did you see a lot of demand, first of all, also from international investors? And did that lead to a pricing advantage for you when you issued?
So our colleagues here in the NDMC would know better than anybody that it's been a very tough market this year. SNB was lucky to get away with its first senior issuance as a very well received issuance with a very diversified, broad set of investors who held with us for a competitive price as well. So 100% without a doubt, it had a positive effect to the momentum, to the book building, to the diversification of demand. That was something that we think it was a positive, or was positively driven by the structure of the issuance being sustainable. The actual pricing benefit is hard to quantify, and it's something that we've asked a lot about. And there is what they call a greenium, which has been quantified at various levels from different market participants. So we sense that there's a pricing benefit, but it's very hard to see where we would have priced if it wasn't sustainable.
Thank you. And I always like to emphasize, of course, I asked the question because I know it is a very popular question, but I'd always also like to underline that that should not be the reason to issue a sustainable bond. If you're lucky, you have a greenium because there's a lot of demand. A lot of investors want to invest in sustainable instruments, but it's not a guarantee that you'll have that. So just bear that in mind as well. So that shouldn't be the reason or your main reason to issue a sustainable bond. With that, Mark, can you let us know if there have been any questions from the audience?
Yeah, we've actually got one question from Mr. Al-Dakil, who asks, who is the competent authority in the kingdom to raise awareness about sustainable bonds and the associated opportunities? I don't know, Hatem, whether this would be really a question for you or perhaps even for something like the Financial Academy.
My 2 cents on this is that I mean, the CMA published relevant guidelines, I think. But if there's any other authority that would have a role to play, I'm not sure. Maybe I would like to hear from Simone or Rico if other markets tend to have their central banks involved or any other authorities.
Yeah, I'm not sure I fully understand the question. It's probably coming from someone that hasn't had time to fully acquaint themselves with the principles. So the principles are voluntary market standards. And if you are an issuer, so if you're a corporate financial institution, even if you're a sovereign or sovereign like an SSA, you know, anyone who wants to issue a sustainable bond, you know, you don't need to check with a competent authority or something. You would just get your teams together internally. It's one of the advantages, I would argue, with sustainable bonds as well, that finally you get different departments talking to each other as well, because a lot of departments are relevant to this when you select the projects and manage the proceeds and so on. And then you importantly should perhaps speak to some advisors on the environmental side if you're issuing a green bond, for example, and you don't have the in-house expertise. Of course, you should involve an underwriter that will have experience with other issuances as well. But that's really what I would say. So there isn't sort of a nationally competent authority or something that you need to involve on that.
Thanks, Simone. Look, I mean, this is the, I would leave the floor open if anybody has any other questions. We've got about 10 minutes left, 5-10 minutes left in the webinar. So if anybody who's online would like to ask any questions, please, this would be an excellent time. Otherwise, we'll just keep monitoring the chat thing, and just ask Hatem or Simone, Rico, whether or not you guys have any sort of other comments before we wrap up.
I can add some quick comments with the last question. I think in Asia, this is quite a common question we basically are being asked before. I think, as I said, this is a very diversified region, and we have seen certain countries with domestic green bond regulations. So in that sense, you have a very clear regulation to be complied with. So as long as you comply with the regulation, market will have to face in such products. So the question rather is about such regulation are consistent with international standards, i.e. the principles developed by ICMA, like a green bond principles. We have a lot of questions, for example, even with a social bond, say during the pandemic, is COVID related bonds issued in the market are, can be seen as social bonds. We actually released such Q&A to really clarify, actually not necessarily they're the same. And we have quite a strict, more detailed level rules released in such Q&A to be associated with our social bond principles. Meanwhile, we have certain other economies, such as like Hong Kong, Singapore. They are rather financial center globally and part of the international market. They obviously, the regulators won't be bothered to develop their own domestic regulations. It's not that meaningful. They rather follow international standards like our principles. If you look at such voluntary-based market using such principles, so all the intermediaries are very important to give such advice to the issues, like Simone just described. So first, you need to engage with right underwriters to advise you about the structure, everything, and also you have such external reviewers ready to endorse the approach and give such second party opinion or even certification about such bond, basically to give face to the market. Then at the end of the day, it's the investors to say, okay, I feel very comfortable to invest in such products because this is a legitimate and actually the good one. So it's really the market to say whether this is good or not. So there's always debate in Asia. So we want some really strong regulation, or we just leave to the market. And we, particularly the Hong Kong office, always have such discussion with different market participants and also regulators. Obviously, ICMA welcomes, just a more green bond issuance. If the goal is to really push the sustainability agenda, this is always positive. However, we also want to make it clear that actually we still welcome, the free market to just adapt our principles, and it's not super necessary to develop the regulation. Sometimes it's just disencourage the issuance, particularly with the emerging market, who is just a fast growing, and also sometimes is not so sophisticated, particularly from the investor side. So if you put too much, then basically it will lift the cost and discourage particularly the issuers to tap the market. And also there's a lot of education to the investors also. So maybe it's not ideal, at least at the early stage, to have a very strong regulation, etc. So currently, I think this is still what I personally have observed in this part of the world.
Yeah, thank you, Rico. And just to say as well, I've briefly shown you the mapping to the SDGs that we have available, because investors like that. Also, if you want to add even further on, the greenness or determining the greenness of your project, because the project categories are very general. We see a lot of issuers also adding the taxonomy. The EU taxonomy that Rico mentioned before is obviously the most perhaps well-known one. It's the most advanced one, but we really see a proliferation of taxonomies globally. Others that are quite advanced already are the ASEAN one, and also the South Africa, for example. Then within ASEAN, we see different countries, Singapore and so on, also develop their own taxonomies. So that can then help. For example, the EU taxonomy specifies technical screening criteria. So there you would really specify, if you're financing something, what's the CO2 emissions level that it can have, what's the threshold to count as green. So if you want to add or go down to that level of detail, which I'm sure investors will like as well, then you can combine taxonomies as well with your green bond issuance, for example. With an eye to time, I think we have 4 minutes left. If there are no more questions, Mark, I think we can actually close here, unless, I don't know, Hatem, if you wanted to have a final word as well, since Rico and I just spoke.
No final word, but I just wanted to add to what Rico said, because that made a lot of sense to me. It's that it isn't a regulator who's telling you what to do in this. You have a broad set of guidelines which are recognized by the international investment community, and you're communicating what you're doing, and it's essentially being driven by the demand that generates. So it really is the market that's telling you what to do here, to the extent that you're catering to investors' preferences. And I want to add a point that while we're on investors' preferences, that the SNB issuance was Islamic and sustainable. And in our humble view, there's nothing that should prevent the two things from being something that can mutually coexist.
Excellent.
Yes. So Sukuk, or Islamic finance, is quite sustainable in a way. Anyway, I would say. And just the last thing I would want to add to what you and Rico said. So the principles are the global voluntary standards, but we see indeed that different regions globally are not just adopting but adapting the ICMA principles. So a very prominent example in ASEAN would be the ASEAN Green and Social Bond Standards. So they are basically the same as the green and social bond principles, but what they add, for example, on the green side is they have a very explicit list on what cannot be financed, for example, fossil fuels. So it's very explicit there. So you can have that being explicitly mentioned in the GBP. I guess anyone would think if it's green, it's not going to finance fossil fuels, but the ASEAN standards make this very explicit indeed.
Excellent. Well, look, thank you all. We'll take the opportunity there with 2 minutes from my reckoning to remain. I would like to take the opportunity to, on behalf of the Financial Academy and of ICMA, to thank you all for speaking today. Mr. Hatem, thank you so much for taking time out of your schedule. I know that as a commercial bank, you don't have a lot of time, so we really do appreciate your input and your participation today. Simone and Rico, I'd like to thank you both very much as well for your input and your presentation. I think it was really, really valuable. Finally, I would like to remind you all, I should also say, thank you all to those who have joined us today. We had a pretty good sort of turnout. 30-40 people were with us today, and I think that's a great indication of the popularity and the interest in these types of instruments and the opportunities they present for the kingdom. So on behalf of ICMA and Financial Academy, thank everybody for coming. Remember that there's a QR code that we would welcome your feedback on this webinar. We would like to do more of these type of things, but obviously your feedback will prove really, really valuable to us doing this. So thank you very much, and I wish you a good day.